Good evening and welcome. The date is 22nd July, the Sensex expiry on a Tuesday. But before we go to Sensex, let us first see what happened in the Nifty today. Now Nifty, as you can see on the picture, I also tweeted this today morning that the strikes which I was working, Strangle strikes, it is written straddle because that's what comes on the code. So the Strangle strike which I started tracking in the morning was 25,200 call and 25,050 put. That got sold at 105. If you see the bottom pane, the IVRQ, from a high zone at 920.25 itself, it entered into a normal or a low zone. That is, IV was coming down. And since this was not an expiry day for Nifty, we can easily sell early morning when we get out of the high IV zone. Now, this, if you compare to the past few days, the IV from high to normal went around 10, 10:30, 11. But today it happened very early in the day at around 9:20, 25. So we sold this particular strangle at 105, 25,200 call, 25,050 put. Came down, went up, came down, then went up and took out your stop loss at 102. So we got 3 points on this particular strangle. Then according to the logic, the strangle strikes actually changed. I also posted this. The strangle strikes have changed slightly at around 11:23. New strangle strike was 25,150 and 25,000. That is, the strangle which we started, it came down by 50 points. Okay, it shifted one strike down. Now let us see what happened to that. If I go to that straddle price, see the point where I have marked. IV from high are entered into a low regime. Yellow is absolutely low, not even normal. Right? The line is red. Your strangle price is below the stop loss. This was around 100, the stop loss. The price was 94. So you could have sold the strangle at 94 with a stop loss of 100, and that continues for the whole day till 80. So the trade is 94 to 80. So the first trade we got 3 points. This trade we got 14 points. These were the trades. Simple enough. So the analysis is like this. The first trade, entry price was 105, exit price was 102. Then it went down, but we are not interested. Entry at 105 was good because it was a high in the strangle premium and transition to low IV regime, indicating a favorable theta decay environment. That's why we entered. IVRQ supported because IV sharply compressed. Exit zone was, as I said, where the stop loss went. Max decay went. Okay, now the second trade, 25,150 call, 25,000 put. We entered at 94, exited at 50. IV regime was low. Straddle value at analysis time, that is the closing of the straddle, was 76.70, lowest of the day. Multiple sell triggers were at 94, 90 and 84, indicating layering of short strangles as IV remained low and price action stayed range bound. Price compression, that part of the day was extremely range bound. Sideways Nifty movement. IVRQ panel, continued yellow triangle, stable IV. Red line flattened low, no major volatility shock. Entry very near, small IV uptick. That is, if you notice this, we entered on an IV uptick. The IV regime was continuously low, so you could safely trade through the straddles. Now, if on a straddle or a strangle, if you are expecting a massive spike, please remember the IV regime will be either normal and in major cases it will be high. If it's a low IV regime, you will probably not ever get a spike. The decay will be just killing. Okay, slow poison kind of decay will be there. So this was today's Nifty. Actually, this comparative analysis which you see, I'm writing down. I keep it at track every day so that I can go back. So the strategic insights from today was both trades were excellent examples of theta decay and a low IV regime. The system, straddle and IVRQ, successfully filtered entries post IV spike and ensured trades during compression zones. Morning trade captured premium decay after the short volatility burst. Afternoon trade leveraged stable IV and time decay post directional exhaustion. Final verdict, both trades were well timed, correctly direction neutral and strategically aligned with IB compression regime. Great demonstration of sell IV in compression principle. So whatever you are seeing is basically the training hands-on of this particular system. Now let us come to Sensex. The Sensex first trade was on the 80 to 300 straddle at 194. Okay, this happened sometime around, the time should be here, yeah, 10:25, because the previous the IVRQ is green before that, so it's a high IV regime red. I will only enter that when IV regime has become normal. This one has become red, so I entered at 190. Here it came to 165. Now this is important. This time is around 11 o'clock. It's a theory of mine which I have understood through observation. I have also taught in the course. I mean, the course students who are already here know this, that 0.2% of the underlying is a very important price on the straddle. That is, if your underlying is 82,100, that is like, okay, this is 82,300, which is like your Sensex underlying. So 1% of that is like 823 points. Okay, 0.02% of that, 0.1% of that is 82 points. So 0.02% of that will be 164. Now it's our observation that on expiry day, in a normal decay regime where the decay is not very sharp, it is decaying normally, the ATM straddle quotes at 0.02% of the underlying at around 1 p.m. Correct? So if this happens before 1 p.m., what happens is either the straddle stops decaying, or more dangerous, there's a spike incoming. When today at 11 o'clock this particular straddle went to 164, that means a massive decay has taken place. So if you stayed short on the straddle for the next 1 to 2 hours, you probably wouldn't have seen a decay, or maybe a decay of 5 to 10 points only. No use staying within the trade. In fact, when this happened, I made these two tweets. One at 10:53, that is 11, straddle value of 0.2% underlying before 11 am. This is normally reached around 1 p.m. So the decay in the straddle has been huge, and staying short in straddle here is not a good decision from a risk reward perspective. We'll wait for any spike on straddles. If it comes, else no trades. Correct? This is where I was telling it when straddle was completely down. I also explained it after this spike. So what happened? From 160, this straddle spiked to 260. So if you stayed short in the straddle, your whole day's profit would have been gone. Rather, if you concentrated on the 80 to 300 straddle only, this would have been your much better place to sell. That is, you pick up at 164. Here when it's come to around 185, 186, see, this is again come into normal. This is red. This is below stop loss line. You could have sold out here. So this is your training for the day. But what we did there is we switched. Okay, this was the whole analysis. You can go there and see the tweet. Now, when actually Sensex went down, the ATM changed to 80 to 200. That is around 11:45. So if you see this place, your IVRQ has entered normal zone. This is red, correct? Your straddle trend indicator has also given a sell. So if you sell this, it will be around 170. Your stop loss will be somewhere around 195. And this trade, if you could hold, went down till 13. You had multiple sell and buy signals. For example, if a square of signal comes here, I will square this off almost at the same price. I will sell again out here, square it off around here. These two trades almost at the same price in and out. The third signal comes around here and that continues. You can add positions out here also. The last chart which I will show is basically the rolling straddle. That is when the straddle strike is getting changed continuously. The last ATM changed to 80 to 200 at 220, which is around here, which was around $100. It went to $13. And if you see this particular straddle trend indicator continuously in yellow, you can easily sell the straddle and sit tight. You don't need to poke the straddle and go out. Okay. So this covers Sensex for the day. This one, same chart. And this is just what I have written. IV regime low, no spike, straight trail, straddle decay from 100 to 13. So these are basically high theta capture trades, near perfect scenario of continuous decay in price and volatility. Delta neutral, because straddle is basically a delta neutral strategy. IV crash, time decay, clean 80 to 90% erosion of your straddle. So IVRQ and the QG system, which is on the straddle with stop loss and sell signals, were in full sync today. Trend sell continuation, same 80 to 200 strike, continuation held throughout. Actually, the whole trade today was on the 82-200. So this was layered selling with no regime shift. When I say layered selling, if you are an aggressive trader, all these points are your entry points, right? This is an entry point, this is an entry point, this is an entry point, this is an entry point. I will not suggest pyramiding and going up in positions, but once you have sold here, if the stop loss comes down, you can take a small trade again here also in the same direction. So that is why what we call layered selling. We will discuss about this later. Same thing. So 82-200, full day trend decay, multi entry, post noon decay, morning IV crush, post rally. This 80-300 we will go back once again. I want to show you something interesting. Okay. This 165 is squared up, went to 260, correct? When it went to 260, this IV regime initially was high. Now notice this out here. This turned green, correct? Turns red out here. This bar. But we are still above the stop loss level. So the moment this stop loss level breaks, if you are on the 80-300 straddle, you can sell this straddle at this particular price somewhere around 180, and it will go. It went down to 100 very smoothly actually. So if you have this straddle on your screen and you are trading this, wait for this IV crush. See, this was your IV spike and this was the crush, and then IV continuously went down. So if you want to play this, this is a place where you can play this. I will not suggest selling this spike as of now because your regime was high. If regime was normal or low, we could have sold this spike also. That did not happen today. So just let us come to the final verdict. All trades were well aligned with IVRQ regime, lower falling, ATM stability, well chosen center strike, trend based decay without IV spikes. So ideal deployment of systematic short straddle logic, massive theta vega edge captured, no stop loss hit in any scenario due to regime control trades. So these were the trades for today. Now I got something interesting today which I want to show it to you. This was what somebody said today on Twitter. Now, I have just hidden the name. I don't want to post somebody's comment without his permission. This person has been a student of mine for very long. He is not based in India. Now, he has been a subscriber to majority of my indicators, but this one is too good. He had 4 trades today, all in profit. Now, then we had a discussion that when we are expecting a spike, what scenarios should be there and such. So, a lot of you are watching the demo, but just a few are asking me questions over Twitter DM. So if you do, I always answer. Maybe in market hours, if I'm busy, it will be half an hour later, 20 minutes later or something. But this guy was asking me after 3:30. So we could easily answer that. So if you have any questions, you can ask me on Twitter DM. You can send me an email if you want any clarification. I would be pleased to answer your queries. Now, the reason I've given a demo is, I want you to see the demo for 7 days and understand that whether this will help you. You understand yourself whether the system will help you make money, whether you are comfortable with it, whether you can follow the rules. If you can, think of subscribing. If you have any queries or any, I would say, lack of confidence whether you can sell straddles and strangles, do not subscribe. So this is the whole reason of the demo, for you to understand whether this is suitable for you. Because in my experience, all kinds of trading are not suitable for everyone. Somebody scalping is suitable, somebody option buying is. If you're going for option buying, go for AV Web Navigator. It's a much better tool. This tool which you're seeing is completely an option selling. And after the demo is over, I will hold the masterclass and regular training and stuff. And this will get much more improved, or much more, I would say, quantitatively advanced. But do see the demo every day, see my videos and understand whether this will help you. This is most important, and this is the sole reason I am running this demo with such high feedback every day. And if you have any question, again the demo is just for 3 more days, Wednesday, Thursday and Friday. If you have any questions, please clarify with me. Send me an email if you want, send me a Twitter DM if you want, and we can have a discussion. What are your queries, what are your where do you think you are having a problem in following the system and stuff. We can try to solve it. Okay, thank you, see you again tomorrow. Bye.